Welcome to another video. We are going to talk about how does a family office operator purchase real estate. A lot of people have been asking me to make more videos on real estate, and this video will absolutely meet your expectations because we're going to talk about the most intelligent way that we can acquire real estate using our taxable brokerage account. We're going to create a scenario using the portfolio on the screen. So this portfolio is roughly net liquid value of $10 million. I've used this in the previous video. And the challenge in the video is how do we purchase a property that is, let's say, $8 million. And as you know, in videos previously, I would not borrow more than about 20 to 25% of the portfolio. So as you can see, we do not have enough money to buy the property. So how do we do it? How do we achieve this? In this sort of retail world, they would walk into a bank and ask for a mortgage. They would show up with their W-2 income, their bank statements, their ID, their credit score. They go through blood, sweat and tears and beg the bank for a mortgage. Well, in the world of family offices, they absolutely do not do that whatsoever. All the leverage is now going to be switched back to you. You will have all the power by the end of this video. You see, money is not power. A lot of people think it is. Knowledge is power. So if you have money but without the knowledge, you're actually just a victim. You are prey to Wall Street. You are prey to the banks, and they're going to get you. And this video, we are going to go right into it. So what do? Do we sell our stocks, pay capital gains tax and buy the property? Absolutely not. This is absolute financial malpractice doing that. Do we buying it cash is just wealth incineration. What you're going to understand is your taxable brokerage is your greatest weapon. People view it as like their savings account. They view it as they try and make some money, buy low, sell high. And this is going to totally change your metric of success when you see the true potential of what this portfolio is capable of. So we're absolutely not going to sell it. And if we're actually being responsible with a margin, 2.5 million. Okay, yeah, I can take 2.5 million out of this portfolio, but that's not going to be enough to buy the property that we want. Let's just keep this in the USA to make it simple. We're not going to do offshore properties in this video. $8 million property, let's just say it's like a ranch in Texas. Right, that's what we're going to go with. Now, we could use that as a down payment. Right, this is one option. However, if you walk into a regular bank and say, okay, I've got a down payment, how much can I get the mortgage for the remainder? They're going to want your bank statements, they're going to want credit checks, and they will not be able to even use your wealth as income. What we need is an asset-backed lender who can actually lend based upon your taxable brokerage. These people absolutely exist, but they're hidden from the retail world. And the most important thing to understand is we do not go begging and pleading to the bank. We will use a broker to identify the bank that's going to offer exactly what we want. Because as I've made in previous videos, when you want Lombard lending, what will happen is it's a biological instinct of the private bank to say, okay, we can do this for you, but we need you to transfer your assets over. Transfer your assets over, and we will charge you an AUM fee, and we will give you a relationship manager, and we will give you a private service. This is all an illusion, and we're going to cut straight through the illusion, because this is why the knowledge is so important. Because look, what you need to remember is liquidity is a commodity. Banks have no pricing power when it comes to a loan. If one bank offers you 4%, and another bank offers you 5%, you're just going to take the cheaper loan. It's a race to the bottom. In fact, banks have infinite fiat currency. They can just type the money into a screen and it is generated and created. But what they do not have, which you have, is collateral. You have your stocks, which is your collateral, and the property that you're looking to buy, which is collateral. That's what the bank wants. So you have the leverage. You are in the position of power. Now, we could speak to a private bank and say, okay, in the UK, we could call it dry lending. In America, it would just be called asset-backed loan. Well, you could say, okay, I'll provide the down payment and you provide the mortgage for the rest of the property. Yeah? So that's one way you can do it. And you can negotiate the rate. All rates are based upon the SOFR. Everyone adds a credit spread to the SOFR rate. The credit spread is just how much above the base rate. That's it. All banks are running off of this rate. So it's either add 1% above SOFR, 2% above SOFR. That's usually how it's done. You see, because if we went to a normal retail bank, a regular retail upstreet bank, they would make us pay capital repayments. So we would have to fund the interest and the capital repayment. That's a problem because that ties up all your cash flow. We just want to pay only the interest because that's how a margin loan operates. The interest doesn't even need serviced on a margin loan. It just gets added to the loan. But with the bank, we would need to service it. Now, this is less than ideal because if we use our margin for a down payment and then we use the margin to service the debt, that's going to start to breach our loan to value. Remember, I don't like loan to value to be more than 20 to 25% on this portfolio. Okay, so what's going to happen is we're putting the portfolio under too much stress to grow. We're demanding too much velocity. And this portfolio is heavily dependent on its velocity from the QQQ. So the situation is still not ideal. So how do we resolve this? Well, I'm going to resolve it. But before we do that, when you are buying a physical property or a physical asset, I have no issues with the purchasing of real estate, but you must understand that it is not an investment. This is not up for debate anymore because you get all this conversations online and people fighting about property versus stocks. It is not a debate. So we're going to settle that first because I need you to know that if you're buying a real estate as an investment, I'm just going to stop you right there. A property decays, so therefore it depreciates. Here's the math. From 1996 to 2026, if you price the average cost of property in America in gold, it has went down in value. It's lost 76% of its purchasing power. When you price in gold rather than a currency that can be printed to infinity, you see the true value. So in actual fact, people that believe that their property is going up in value, it's going up at nominal terms, but it's a nominal illusion. When you price it in gold, you see the truth. Okay, so if you're going to say, I'm here to buy middle-class suburban homes as an investment, that is not how a family office operates. That's how the middle class invest. That is not how a family office invests. If a family office wants to buy a real estate, it must be prime real estate. Okay, it's not must be. If you're buying it for consumption, that's absolutely fine. You've accepted that it's not an investment and you just want to buy a ranch or something in Texas or whatever. That's fine. That's what we're going to discuss. But only Manhattan, London, Monaco are actually going to keep up with the money supply and keep up with gold. And it holds its value, but it's only because of the land underneath it that's at value. Because you can't create more land on Monaco because it's got the Mediterranean Sea up against it. But But that's fine. You've cleared that up. You want to buy the property. How do we do it? You always buy a property with an LLC. Okay, that's the easiest rule to write on a t-shirt. Your digital assets, like your stocks, always stay in your name. Properties and physical assets are bought with an LLC. I like Wyoming LLC. The Wyoming LLC offers total public privacy. So you would effectively be a ghost to the public. The federal government know who you are, obviously, but you're a ghost. So the LLC is going to buy the property. Okay, we're going to buy this ranch in Texas. So the LLC, which can be created quite straightforward, that's the easy part. It's viewed as the most complicated part. Trust structuring, LLCs, architecture, offshore. That is all, it's all noise right now. All that actually, the foundation, the bedrock, the gravity is your taxable brokerage. That is your greatest financial weapon. The rest of this stuff is all administration. This can be done easily. So you're going to buy it with the LLC. And let's just say we find a lender. Okay, so the lender says, right, okay, this LLC has absolutely no income. It has nothing. So why would we lend to an LLC? Well, you are the guarantor. So you either say, okay, I'm going to guarantee the LLC's loan against this Texas property. What we then do is instead of the down payment, we offer a tri-party pledge. So instead of using our margin, we can pledge our stocks. So let's say the QQQ. We will pledge the equity gap. So let's just say, off the top of my head, $2 million or $2.5 million. This will be the negotiation part. And the bank will say, okay, we'll take the QQQ, the 2.5 million, and we'll accept your pledge. What then happens is something called an ACA. All this means is the broker is notified of this agreement and it's put onto the account that there's a legal contract between you and the bank. So there's a tranche set aside as a pledge. The bank can view your portfolio as a read-only basis. They cannot do anything. And if it ever got to a point where the portfolio crashed or you didn't pay the mortgage payments, they can execute a margin call. But the great thing about this is it buys you the one thing that's most important in a crash. If a crash did happen, it buys you time. The bank then officially give a margin call. They actually phone this time. Can you add some cash to your portfolio? Do you see what we've just done here? We have bought a property with zero cash down. So our margin loan is completely freed up. They have the pledge on the assets. Okay, so how do we know? Right, so how do we know this for a fact? How do we know this for a fact? Do we need to phone up every single private bank and figure out who does the tri-party pledge? Well, no. Do you know why? All we need to do is look at the broker. We go straight to the broker. Account control agreement. So this is on Interactive Broker. Yeah? So it gives the lender control over the assets in the client's brokerage account. So you're giving them a charge over a certain amount of assets, your stocks, your collateral. Yeah? The game of finance is honestly just transferring risk to someone else. This is all the game is about. We are transferring the risk of inflation to the bank. The bank just wants collateral. Collateral is actually what wealth really is. People think it's cash. It's collateral. It's all about pledging collateral. This is why your stock portfolio is not just about buying low and selling high. This is we're completely elevated above the retail game. Retail investors spend their whole life, maybe throwing all their money into a Robinhood account, and they're just waiting to sell it one day. They don't realize the power it possesses. We have just bought a $8 million ranch in Texas. with the zero cash down. Now what the margin loan can be used for is to service the actual mortgage payment. So let's look. So we've borrowed 100% loan to value. So the interest monthly cost is around 30k. So it's always got to be interest only. Yeah. Capital repayments, which is the retail civilian world, is tying up all our cash flow. We need the cash flow, and we want to keep as much leverage in our brokerage account as possible. That's why this method is so effective. It will take obviously 90 days, and it will take a bit of friction to get the deal done, but it gives you flexibility in cash flow. Now the margin loan can actually service the debt. Yeah, so we just log on to the brokerage account and click withdraw. Okay, so now it's minus 30k on the portfolio, and that services the debt. Margin is ideal for lifestyle. But when we want to buy the assets, the larger assets like real estate and other physical assets, that's when we want the Lombard loans. But it's under your terms and conditions. This is what it's about. The civilian world are begging and pleading to the bank. We've changed the game here, because what you'll do is you'll have a broker. We'll need a broker to actually facilitate the deal. They're financial mercenaries. Their job is to go to banks, phone the banks and say, look, client is here, wants to buy a property, zero AUM fees. They're not going to give you the brokerage. They're not going to give you the stock portfolio, so you don't even ask. And we want to know what the best deal is. What is the best deal? What rate are you going to give us? We only want interest only. Yeah. What interest rate above the SOFR are you going to give us? See, when you're speaking the language that they're speaking, you've taken away all the power. They're like, okay, when you demand, you make the demands, it changes everything. You've now got the leverage because you have the collateral. The only negotiation we might come into how much they want you to pledge. Yeah, so that's it. Usually they might want, 30%, 40%, but it's virtually no risk to the bank. That's why they do these deals, because the property itself is an asset. Ideally, if it's a prime real estate, they know that it will go up with the inflation. If it's prime, even if it's not, they know that it's collateral. It's healthy collateral, and they've got institutional liquidity, your collateral stocks to back it up. This gets to the other part, which is exceptionally important. This is why I talk so much about the structure of your portfolio, because guess what will happen when the bank looks at your portfolio? They're going to know if you're an amateur or not immediately. They're going to know, is this guy a competent operator or is he an amateur? They're going to look at the portfolio and say, if they look at the portfolio and just see a bunch of retail stocks and about, all these messed up portfolio, retail stocks that are companies with no free cash flow, overvalued. Just if they look at that, they're going to know you're an amateur, and they won't even want to pledge if the collateral isn't pristine. That's why your portfolio structure matters so much. People think it doesn't really matter. That's because they're playing the civilian game. They're not using it to buy assets, real estate. This is how the big players do it. That's why their portfolio's pristine collateral, like the Nasdaq. That's classed as pristine. And they see defensive stocks. They see the portfolio. They know, okay, because that's how they underwrite it. This is all alien to like retail banks. They don't even know. They view this as extreme risk, but in the private bank world, this is common. And there's many many lenders that we can acquire. Yeah, this is why the knowledge is vital, equally as important as your capital. Now, let me just check my checklist. I had other things. So all physical assets in an LLC, right? And your digital assets always stay in your personal name. That's the easy way to remember it. Physical, LLC, digital, you. And your brokerage is the financial gravity. You see, in the world of retail, they're selling their assets to buy a property in cash. People think it's a flex. It's not a flex. Even new money operators are just walking into banks, taking regular mortgages out, just destroying their cash flow. And a lot of new money entrepreneurs don't actually invest. They keep reinvesting in their business, but their business is not pristine collateral, and it doesn't compound the global human progress. Really, when you're buying the Nasdaq, you are buying global human progress, and you're getting a share of that. That is what we're really getting a share of. And we're in a great time right now, obviously with the AI coming in. I'm very optimistic of the future, especially for investment returns in the QQQ. Very positive. But there you go. This is how the operators do it. So tri-party pledge, LLC on physical. And there you go. We have just effectively engineered a property without a single dollar. And why? Okay, yeah, I should also mention why we're using LLC is because we're quarantining the legal problems, the liability. Liability is still a problem with a physical property. If someone slips on your driveway, if the property doesn't, if they can argue that a chandelier falls on someone's head, they say, oh, this property wasn't well maintained, they're going to come after you. Well, they come on now. They're going to come after an LLC. So at least it protects your portfolio. That's why we do it. We separate the portfolio from the physical assets, because physical means it can decay. If it can decay, it means you can get sued. That is why the LLC is important for that structure. So you're just the guarantor to the LLC. And if you are a high net worth individual and you're worried about you getting physically sued, you need to have some sort of insurance. You need to have some sort of umbrella insurance, personal liability. There's great insurers that can cover you. They have like up to 20 million for like people trying to claim against you. And these companies will fight ruthlessly to protect you. So that's how you protect yourself. So it's not really necessarily as complicated as people think. There's all these great detailed architectures, but the bedrock is your brokerage account. We can talk about a revocable living trust in another video. I've got so many topics to go into. I've got a bright future ahead on the channel. But there you go. That is the real estate. So real estate is a consumption. Do not forget it. If you want to buy properties in Monaco, you're buying the jurisdiction. That's really what you're buying. And it will keep up with the money supply. This is why we track the money supply. This is why we track the cost of power. M2 is the cost of power. CPI is the cost of survival.